Welcome to Something Personal. I'm Amy Laburda, the editorial manager at Palisades Hudson Financial Group. All of us are familiar with the experience of buying an appliance, an electronic device, or a phone, and getting the familiar question, do you want to add a service plan? But what is the financially smart answer to that question? I actually didn't know either, but luckily I can ask one of my colleagues, and today you can listen in on his answers. I'm happy to welcome Thomas Walsh back to the podcast. Thomas is a senior client service manager here at Palisades Hudson, as well as a certified financial planner certificate. He's a member of our firm's investment committee and its entertainment and sports team, and he works with clients across the country. Thomas, thanks so much for joining me for another episode.
Of course, Amy. It's great to be here.
So before we dive into discussing your actual advice, I thought we should just take a minute to clarify our terms before we get into it. When we're talking about service plans or extended warranties or manufacturer's warranties, what are those three things and what are we talking about with them?
Okay, yeah. So let's start with the basics. There's a manufacturer's warranty, which is included automatically when you buy most products. And that one protects you if the item you're purchasing has a defect in materials or workmanship. And it's usually for a limited period of time, like 60 to 90 days or around 1 year. A service plan or extended warranty, that's optional coverage that you pay for. The idea is that it extends the length of that initial warranty, or it adds protections the manufacturer doesn't include, like accidental damage or like power surge protection. So you're essentially paying for extra time or a broader scope of coverage.
Okay, so a service plan and an extended warranty are similar items, and a manufacturer's warranty is sort of a qualitatively different thing. So it feels, at least to me anecdotally, like a huge number of products now come with the option to buy this extra coverage. Is that just confirmation bias that I've been looking for it, or does the data hold out that these kind of things are widespread?
You know, the data definitely holds out that these have become very widespread. The global extended warranty market was valued at about $130 billion in 2022, and it's projected to reach $286 billion by 2032.
Wow.
Consumers, they spend more than $40 billion each year on service plans in the U.S. alone. So retailers have learned that extended coverage is extremely profitable. And because of that, you'll see these offers on everything from expensive electronics down to, inexpensive accessories.
Do you have any sense of what the most common things that people buy these kind of service plans or extended warranties for are?
Yeah. So the big categories are electronics, things like smartphones, laptops, TVs. And then there's appliances, especially larger ones like refrigerators, washing machines. After that, you can find coverage on power tools, furniture, watches, really almost anything that retailers can attach a protection plan to. Pretty much if it plugs in or has a moving part or charges, there's chances that someone is offering a service plan on it somewhere.
Yeah. I've run across ads for things called home warranties. Now, I'm not a homeowner, so they've never been very relevant to me. But what are those? What are they advertising?
Yeah, so home warranty is a little different. It's going to bundle coverage for major systems in your home. Think HVAC, water heaters, electrical systems, and sometimes appliances too. They're often marketed to homeowners who don't want surprise repair bills.
Yeah. The
important thing to know is that they're not the same as homeowners insurance, and claims related to them can be kind of hit or miss. You really need to read the exclusions carefully. But I'll add that a home warranty, it can make sense if your home or major systems are older, or you don't have a large emergency fund to cover those unexpected repairs. It makes less sense if you have a savings buffer that you can use to cover the cost of repairs, or your home or appliances are newer and because they're likely still covered under the manufacturer's warranty.
Yeah. So to back up a little bit to that list of items that you gave, common types of things, I feel like in my personal life, you expect when you're buying a phone or a laptop to get this ask, but it feels like these days I'll be like buying a USB-C cord and it'll be $15 and they're like, would you like an extended warranty? Which feels on its face a little bit absurd. You mentioned earlier that these are a big profit center for retailers. Is that really the main driver of this kind of expansion that we've seen?
Yeah, I think I find it's sort of a result of consumer behavior, mixed with attractive profit margins for the companies that offer these plans. Retailers make a significant markup on these types of plans. Sometimes it's actually more than the profit on the actual product. They're making more off the service plan at times. And most people never actually use the service plans. So from the company's perspective, the risk is fairly low and the reward is rather high.
Yeah.
They're also responding to the fact that people hate the idea of replacing something expensive, unexpectedly. So the pitch is somewhat a play on emotions that, spending a little more now will help protect you from this big bill later.
Yeah, I mean, so that's the retailer side. Flipping back to the consumer side, obviously it's easy for me to laugh off the $15 USB cord service plan. I can just replace it. It's fine. But if you're laying out hundreds of dollars, say, on a brand new laptop, there's that dread of, oh, what if something happens? What if I, destroy it right away somehow? But on a more practical side, if we're sort of putting emotions in the backseat, is the service plan ever worth it to hedge against the risk of an expensive problem?
So most of the time, I would say no. Extended warranties, they often overlap heavily with the manufacturer's warranty. And many problems typically show up early within that initial period that's still covered by that warranty. And then on top of that, I guess laptops and electronics are generally getting more reliable over time. So they are lasting longer and you're having, somewhat less issues, I would say, at least during any of the coverage period you could get with the service plan.
Yeah.
I usually tell people to check what the manufacturer already covers, check what your credit card covers, because there may be protections, and then ask whether paying that extra amount, if it truly shifts, enough risk off your shoulders to be worth it.
Yeah.
But I don't want to sound too, anti extended warranties. So I guess earlier this year, when I bought a new MacBook at the beginning of this year, I actually did opt in for the Apple Care Plus service plan that they offer. The main reason I purchased it was because the service plan covers accidental damage, where the standard manufacturer's warranty did not cover.
Right. It's just defects in manufacturing.
Correct. Yes. So my previous laptop actually died because of an accidental water spill. So I was a little more sensitive to that risk, I guess, this time around.
Sure.
So in this case, I all the coverage details and the fee, it felt reasonable relative to the high price of the laptop. So there are situations where the extra protection makes sense. It just sort of depends on the details around the product you're purchasing and then your own experience with it.
Right. Well, I mean, while we're talking about expensive purchases, I think a car is one of the biggest ticket purchases most people are making in their day-to-day life. And those often come with an offer for a service plan or extended warranty. Is that one situation where it may be worth it? Or is that one where, again, you just sort of have to look at your own situation?
So cars are one area where extended warranties get more complicated. A manufacturer's warranty on a new car is usually pretty solid. It's often 3 years, 36,000 miles, bumper to bumper coverage, and even longer for the drivetrain. If you want extended coverage, I'd only consider buying it really from the manufacturer, not a third party service contract. Even then, only after you've had the car long enough to know whether it's really worth it.
So you mentioned checking what's in the manufacturer's warranty before you make a decision about the service plan. Is there a way to find that out before you're making the purchase? So a way to track down that information?
Sure. So most companies are going to publish the full warranty terms right on their websites. I always recommend looking it up before you buy, so you know what's already included. The limitations and exclusions are usually very clear once you read the fine print.
And is it similar places that offer service plans or extended warranties? Do they usually make those available too, or is it sort of more dependent on the provider?
Most do. You can find the information online. I'm not sure that it's actually required, but most retailers will post that information.
And when you're looking at those extended warranties or service plan details online, are there any specific details you should be looking for, either red or green flags, as you're sort of examining the details of the plans?
When evaluating an extended warranty, it's important to focus on the actual coverage that's involved, its cost, and then I would say the likelihood of needing it. Check if the warranty covers parts, labor, and specific failures like mechanical, electrical, or both. And then look for items commonly excluded in the warranty, like accidental damage or normal wear and tear on a vehicle, for instance. Some warranties let you extend coverage to accidental damage or service calls at extra cost. And you should consider whether the product is likely to need repairs after the manufacturer's warranty is going to expire, and how the cost of those repairs compare to the cost of the extended warranty. And then you want to think about the likelihood of needing certain repairs when you're considering their cost. If it's a very low probability of happening, then you can reduce what the cost would be in sort of your cost benefit analysis. And then finally, the claims process and the reputation of the company is a very important factor. Where are their service centers located? How is their response time? And then what are their fees and deductibles if you do end up needing to work with them? So it's a lot to evaluate, but thinking through it comprehensively is really the only way to determine if it's really going to be worth it or not. And an extended warranty is generally worth considering only if the product is expensive to repair, if it's prone to failure after the manufacturer's warranty, or the warranty provider is reliable.
Sure. So as we're talking about this, it's not entirely dissimilar, it sounds like, from insurance, right? You're paying a certain cost to guard against a theoretically more expensive uncertainty. And as we discussed, retailers come out ahead because a lot of people pay for this coverage and never make a successful claim on it, which then subsidizes the few times that they have to pay for it. But what really makes these service plans different from traditional insurance?
So insurance is going to protect you from large, unpredictable losses. Service plans, they usually cover small, predictable failures. And because the cost of the item is known, companies can price these plans in a way that heavily favors them. With insurance, there's regulation and underwriting. With service plans, there's much less oversight and far fewer consumer protections.
Yeah. So we've talked in some of our earlier episodes about insurance about the possibility of self-insuring. Now, for many of the things traditional insurance is good for, that's not practical for a lot of people. But it sounds like this is a place where that might be more in play, where if you're setting aside a certain amount a month or a certain upfront fee that you would have paid for a service plan and just keep that in a savings account, is that going to be a better hedge for a lot of people?
Yeah. So the best alternative to that service plan, it really is to self-insure, meaning save the money instead of paying it to a plan provider. Then if something breaks, you repair or replace it using the funds that you've already set aside. The funds that would have gone toward the service plan, you could instead add those to your emergency fund or keep them in a separate savings account, even with other cash that would otherwise have gone toward a service plan. Yeah. Preferably that money is accumulating some interest over time, which can give you some further cushion when a repair expense inevitably crops up.
Yeah. So not to derail this conversation to talk too much about emergency funds, because we've discussed that previously, but from a financial planner's point of view, how do you tell when something's an emergency? I feel like most people in my life either fall into the category of everything's an emergency or nothing ever is. How do you avoid that pitfall?
Yeah, so That's a good question. And an emergency, generally it should be viewed as something that's essential and unexpected, like, a car repair that has to happen so you can get to your job, or maybe a broken appliance that your household relies on regularly. Yeah. Other things, like a surprise medical bill or job loss. Those are obviously major ones. Those would all be considered emergencies. On the other hand, replacing like a luxury item, or maybe upgrading something like your cell phone because it's slightly an outdated model, those types of expenses generally shouldn't qualify.
Yeah, broken Nintendo Switch probably doesn't make the cut.
And I will add, just on emergency funds, just as a brief refresher, is to, your emergency fund it's meant to give you some cushion when there is a true emergency that requires cash that you didn't anticipate or foresee having to spend. The amount you should maintain in your emergency fund is a very individualized answer. Yeah. But the general rule of thumb is to maintain 3 to 6 months of living expenses, which is mostly meant to keep your household running, should you be unable to work or you lose your job. If you're having uncertainty over the amount you actually need to save, and that's keeping you from maybe getting started, I'll point out that our colleague, Ben Sullivan, he wrote a very useful piece. It's titled "The Elusive Right-Sized Emergency Fund," that I highly suggest checking out on our website if you're facing this issue.
Yeah, I'll link that in the show notes. Ben really did a great job of talking about that analysis paralysis and how it can get to you. Definitely understand it. So while we're on the topic of emergency funds, I'm going to tell a story on myself, hopefully to make some of our listeners feel a little less alone if this has happened. Though you already told on yourself with the MacBook, so we're all here together. I bought a new phone a few years ago, and it arrived before the case did because I bought them from separate places. And I was like, it's fine. I'm a careful person. I'll just use it without the case for a couple days. And that is how I discovered that my desk is not perfectly level, because the phone slid right off the desk onto the floor. Screen immediately fully broke, couldn't use it at all. And I had declined the service plan, a week or two before when I purchased it. So I just felt so silly. But, I did basically what you said I should do. I had the funds in my emergency fund. I took it to a repair shop. They got it back to me within 24 hours. The phone has worked fine for the 2 or 3 years since. But I remember at the time feeling so silly that I was like, I could have bought this service plan. It would have covered accidents. Because it was my fault. There was no way of arguing that it was a manufacturer's defect. And I remember this sort of sinking feeling when you've caused it, or I assume a roommate, a family member, one of those, you're just like, oh, I feel so dumb. So while I did the thing you described, it worked fine. It didn't hit my budget in any problematic way. I had the money, didn't have to, go into credit card debt for it. But it feels like I didn't do the right thing, even though I really did in a lot of ways. So I guess I wanted to ask you a little bit as a financial planner about the gap between making a sensible financial plan and following it, and that sort of emotional reaction when something expensive in your life breaks, either, fully by accident or because you misjudged. So do you think that sort of emotion can get tangled up in the extended coverage decision-making process?
It certainly can. But, because you had that plan in place ahead of time, and you were able to fall back on that plan even amidst the emotions you were feeling, because, breaking something expensive, it does feel awful, and especially if you did it yourself or something. But so it can, it's, even if the financial hit is manageable, it still doesn't feel good. But because you have that plan, you just have to trust, in yourself that you're doing the right thing and you're sticking to the plan, which is in being disciplined, which is the most important part. That's also why marketers know this, and they like to frame these plans as sort of a peace of mind purchases when you're paying that extra for the service plan. And the truth is that if you have a solid savings cushion and you can absorb most of these bumps without paying extra for protection that you're probably likely never going to use.
So beyond saving a healthy emergency fund and saving up for things that aren't emergencies, no electronic gadget lasts forever. If you want to replace that Nintendo Switch, that's a savings goal. Other than those two things, are there anything else we should do to keep sort of accidents or other problems with our stuff from derailing our monthly budgets?
Yeah, so there's many things you could do. I'd say some of the important ones are to know your consumer protection rights. Mm-hmm. Many states actually require a repair or replacement of items if something is truly defective.
Yeah.
You'll want to look up your state's what's called implied warranty of merchantability laws to see exactly sort of what your state requires and offers as a remedy. In this case, items that are sold as is, which you'll see, those would not fall into this category. They would not be covered under those protection laws. Another thing, you could pay for big purchases using a credit card. Because many cards, they automatically extend warranties or they offer some form of damage protection. And I guess another thing is to practice good maintenance with your things. Simple habits, they can keep your items running longer and at high efficiency.
Yeah.
And lastly, if you're a do-it-yourselfer, let's call it, it can be worth pulling up a YouTube video for maybe repairing like low stakes items. But for anything that's really expensive or still under warranty, definitely recommend being a little more cautious. Those small fixes on expensive appliances or home systems can turn out to be a lot more expensive than the cost of that service call if anything goes wrong. And I'll spare the details there, but I learned that one the hard way.
Oh, no. Well, and I imagine, too, if you DIY and it goes wrong, there might be voiding of other protections that were already in place at that point, too, to worry about.
Correct. Yes, that did happen in my case as well.
Oh, I'm sorry. Didn't mean to prod a sore point. So I often get a laugh when I get those ubiquitous spam voicemails that are warning me about my car's extended warranty because I live in New York City and I do not own a car. So it's pretty easy for me to classify those as spam. And I think I know the answer to this, but just for the record, if you get one of those high pressure calls about an expiring warranty on something you actually own, a car, an appliance, whatever, are those safe to always just ignore?
Yes, and please ignore them. Scammers love these because almost everyone owns something that has a warranty. Legitimate companies, they're not going to cold call you about expiring coverage. You'll also see scam offers like these come through the mail, and they often appear like they were sent by the original manufacturer, or they often include specific details about the vehicle or product that you own to make it seem more legitimate. You can toss those in the trash as well, unless you were, aware of an expiring warranty and you were already thinking about extending it. At the very least, do some further research and ensure that that it is a legitimate company and what is actually being offered.
Makes sense. So let's shift gears a little bit here, and I'd like to talk about another area where I often encounter offers to help my peace of mind, which is travel insurance. I don't travel nearly as much as some of our colleagues do, but I'm still on the road probably 4 or 5 times a year between work and personal. And things, I would say, mostly go smoothly, but I think we've all been there where sometimes travel just goes off the rails in an unpredictable way. As we're recording this, we're just a little past the government shutdown, and obviously a lot of air travel was really snarled up by that. And so we're heading towards the holidays as well. A lot of those travels feel like high stakes. So, as we've been talking about, emotion can really play in on an emotional level. I definitely get the impulse to at least protect your wallet, even if you can't protect your own time. But that said, let's dive into the sort of practical financial planner side of it. What kind of travel protections are out there? And are they things that people should think about broadly before we dive into the specifics?
Okay, yeah. So there's really 4 main types of travel related insurance. They include, there's trip disruption insurance, which covers travel issues related to delays, cancellations, and lost luggage. There's rental car coverage, which usually covers collision damage on the vehicle. the third is travel medical insurance. And that one is important to consider when you're leaving the country. We'll get more into that, I'm sure. And then there's medical evacuation insurance, which is really adjacent to the travel medical insurance, but it specifically relates to covering the cost of medical transportation to an adequate medical facility, should there not be one in the area that you're traveling in.
All right. We will dive deeper into all of these, but given that there are these different types, it sounds like we're already in more nuanced territory than we were with extended warranties. Is that fair to say?
For sure. So unlike extended warranties, travel insurance is a bit more nuanced, and determining if it's worth purchasing will depend on factors like your destination, your current health coverage, and the cost of your trip. But there are situations where it absolutely makes sense.
Okay, so let's start first with trip disruption insurance, which you mentioned, because that's one I encounter a lot when you're buying non-refundable tickets for things. What sort of disruptions do these type of plans typically cover?
So trip disruption insurance, it generally covers the unexpected problems that interrupt or derail your travel plans.
Yeah.
The specifics can vary a lot from plan to plan, but most policies include some combination of coverage related to trip cancellation, interruption or delays, and then lost or damaged baggage. Mm-hmm. So trip cancellation, which reimburses you for prepaid non-refundable costs, things like flights, hotels, tours that you have booked. If you have to cancel your trip for a covered reason, like a sudden illness or severe weather or a family emergency, that's when that trip cancellation can come into play. Trip interruption covers certain expenses if your trip is cut short and you need to return home early. This can include last minute airfare or even the unused portion of your trip. You can get a portion of that reimbursed. Then trip delays would include being stuck somewhere like an airport for a long time due to something like severe weather or mechanical issues with the plane. And that includes coverage of reasonable expenses while you're waiting. And then if you miss a connecting flight or a cruise departure due to a covered delay, the rebooking fees or the cost of alternative transportation is often covered here.
So it sounds like these can vary quite a lot in what they're meant to protect against. So does that mean that you need to sort of get really specific about what sort of protection you're looking for up front when you're shopping for them?
Certainly. These plans, they differ dramatically, so it's important to understand the specific details of the coverage that's being provided. One plan might reimburse you up to $500 for a delayed or lost bag, while another covers $3,000 in addition to paying for essential purchases while you're waiting on your bag if it was delayed. And so, and going back on to that for the baggage portion of the insurance, many plans do reimburse you if your checked bag is delayed, lost, or it arrives damaged. Yeah. And then some policies also cover essential items that you have to buy while you're waiting for your luggage.
So given the difference in coverage, I imagine that there's a range here, but how expensive is this sort of coverage? What should you be looking to pay relative to the cost of your trip? So
most trip disruption or comprehensive travel insurance policies, they're typically going to cost about 5 to 10% of the total trip. But below 5, I would say, is on the lower end. Above 11, or above 10 is on the higher end.
Okay. So you had mentioned in your intro international travel, which I think obviously jumps to mind for a lot of people. But are there any sort of broad categories of trips where either you can probably skip it or you should seriously consider this sort of insurance?
Yeah, so you can likely skip this kind of insurance if you have fully refundable bookings, for instance, or you have a flexible travel schedule where delays and things might not affect you too much. Or even if you have enough savings to comfortably cover any unexpected travel hiccups, then you can usually skip this type of coverage. I would add that most people that are traveling domestically in the US, they can almost always skip this coverage as well. Yeah. If an airline cancels your domestic flight, they're required to give you a refund or rebook you. So the insurance doesn't usually add much value there.
Yeah.
Your regular health insurance also applies anywhere within the country, which removes one of the bigger reasons people think they really need the extra coverage in the first place. And then if you can avoid checking a bag, if it's a domestic flight, then you get to ignore the baggage protection altogether. As for who might want to purchase trip disruption insurance, if you're planning a particularly expensive, non-refundable trip, that's when it can make sense to sort of pause and weigh your options here. As a way to approach that, I like to compare the cost of a fully refundable airline ticket, for instance, with the cost of a cheaper non-refundable fare. And then you add in the price of a travel insurance policy that you would tack on to the non-refundable fare and look at that comparison. Sometimes the refundable ticket is actually the better deal. So you also want to think about the strength of your emergency fund and whether you have other backup options. For example, using airline miles or points to rebook if something unexpected comes up. And maybe you're planning an expensive cruise, you're traversing the Atlantic in the middle of hurricane season. That can be a reason to take a closer look at coverage options as well. Last thing I'll add is there is an option called cancel for any reason coverage. And that can be helpful if you're worried about something specific, like a medical condition flaring up or going on that cruise during hurricane season. You just want to keep in mind with this that these policies usually only refund about 50 to 75% of your trip cost. And the terms can be pretty strict. So you just want to be clear on exactly what's covered, what's not, and then what documentation you would need if you ever had to actually file a claim.
For sure. Yeah, I imagine there's a spectrum for sure, but it's easy to have sort of on either end where you're like, oh, I'm going to go visit my parents and stay with them. So like if I get delayed, kind of whatever, versus, oh, I really need to make this flight because, as you mentioned, I'm catching a cruise and it leaves at a time and I have to be there. Like there's higher and lower stakes involved for a lot of these kind of trips that are, I imagine, fairly intuitive.
So yeah, and then I'll also add to is to check your credit card protections and making that decision, and which could lend toward skipping the coverage as well. You might be surprised, a lot of credit cards, they already include things like lost baggage reimbursement or some form of trip cancellation protection, as long as you use that card to book your travel.
Right.
You just want to know exactly what your card covers. Some of these protection plans cover only the card holder, for instance, while others might extend to, your spouse, kids, or even additional family members. So just, it's worth checking out your card's benefits because there might be something available there.
That makes sense. So moving on to one of the other types that you mentioned, I've actually had to purchase this one for myself, which is coverage for a rental car. So let's start sort of big picture. What are you actually paying for when you buy this sort of coverage at the rental car counter or the virtual counter if you book it online?
So at its core, you're really paying for collision damage coverage on the rental car. Sometimes you'll see it bundled with liability or personal accident coverage too. The vehicle's, of course, already insured by the rental company. So in a sense, you're really paying to keep them from holding you personally liable for any damages to the vehicle.
Gotcha. So I mentioned I've bought this before, but I do want to make clear I'm in kind of an unusual situation in that I am a person with a driver's license who does not own a car, as I previously mentioned. So I'm, as a result, not already carrying auto insurance since I don't have a car for it, which means that I'm not protected by that. Do people who are already paying for auto insurance on their own car, which I imagine is the vast majority of rental car customers, need to pay for this protection as well, or are they already taken care of?
They're likely already taken care of. Your own auto insurance will typically cover rental cars as well, so you rarely need to purchase the rental company's policy. You'll just want to, make sure to check if your coverage extends to renting a car, for instance, in a foreign country, since many policies do limit their coverage abroad.
Yeah, I also want to flag that this is one, as you mentioned on our last section, that credit cards can unexpectedly be helpful. I know one of my cards does offer some extended rental car coverage as a perk. And I just wanted to know, is that another common one people should be looking for? Or do I just have a weird one-off card?
No, that definitely is. It is relatively common. You'll see credit card companies, they offer a secondary, or even some offer a primary rental coverage as a perk. And that can make it easier for declining that policy at the rental company. And,
nice.
So depending on the card, there are limitations, again, when you rent in a foreign country. So just ensure that your coverage applies to the specific situation you're facing.
Yeah. So I only need to rent a car probably once every few years. It's not super common. But say someone like me was in a situation where they needed to rent more often and didn't have a car of their own. Is there any other option for coverage with rental cars, or are you kind of just stuck paying Hertz or Enterprise or whoever you're renting from?
So for frequent travelers, they do have standalone rental car insurance providers that offer just annual policies. Mm-hmm. And those can be far cheaper than buying coverage every time you travel, especially if you're doing so often.
All right, so we've talked about trip disruption. We've talked about rental cars. Let's talk about health coverage for a minute. Obviously, you flagged that international travel is different from domestic. Why is this something you need to think about on an international trip, expanding your health coverage?
So anyone that's traveling outside of the United States, even for a short trip, I would recommend they strongly consider travel medical insurance, because most U.S. health plans, and that includes Medicare and Medicaid, they offer little to no coverage abroad.
Yeah.
And, in emergency care or evacuation overseas, it can get extremely expensive. So it's especially important for travelers who are going to remote areas or places that have limited medical infrastructure. Or locations where evacuation might be necessary. Since medical evacuation costs can cost anywhere from a few $1,000s to north of $100K. Yeah. And so, but some larger employers or global companies, they do offer limited international coverage through their plans, and it's not guaranteed, and the benefits can vary widely again. So it almost never includes the costly medical evacuation.
Right.
So again, it's always worth checking your specific policy before traveling and see if there's any gaps that you need to fill.
Yeah, and it sounds like this is a situation too where the specifics of your trip are going to matter a lot. Like if you're spending 5 days in London, you're going to need a very different amount of coverage than if you're going caving in, rural South America somewhere. Because, medical evacuation sounds like that's a thing that can really get pricey if you're somewhere that's not accessible by normal means of transportation. How do you weigh the costs versus risks for this sort of thing? I know, for a short trip abroad, some people are like, it's a lot of hassle. But, I think as we're talking about earlier in the episode, the upfront cost versus the risk of it getting very expensive later sounds like this is a situation where it might tip more towards the risk of getting very expensive later.
Yeah. So if you're weighing the costs versus the risk for purchasing a policy, it helps to weigh the cost of the policy against the potential financial and health risks. In some countries, emergency care can be extremely expensive, especially if it involves a private hospital. Where even a short hospital stay can run in the tens of thousands of dollars. Yeah. You also want to consider your current health coverage and whether or not it applies to your travel destinations. And then when evaluating the cost, travel medical insurance, it's typically around 2 to 10% of the total trip cost. And that depends on your age, where you're going, and coverage limits that are involved. And you should also weigh the risk of the activities, like you mentioned, going caving, that you're partaking in on your trip. Activities like skiing, scuba diving, rock climbing, and and caving, I'm sure that they are considered high risk activities, and that lends toward purchasing additional coverage. Although some policies, they do specifically exclude injuries that are related to high risk activities.
Yeah.
So again, it's important to really understand exactly what you're getting with the policy you're looking at. And then I would say the final thing is to just incorporate into that decision how much you value the peace of mind that can come with a medical policy like that.
Yeah. On a similar evaluating the policy note, you mentioned earlier that travel insurance more generally can sometimes include a health coverage component. Is that just a thing that it varies and you have to just check what each individual plan says, or is there kind of a baseline that you can expect?
Yeah, definitely look at the details, but you'll mostly see medical insurance plans rolled up with travel disruption insurance and a comprehensive travel insurance policy. Oftentimes, travel disruption covers some portion of your trip costs, should you cancel due to a medical issue, while medical trip insurance is more so covers medical emergencies during your trip. So yes, you can usually you'll find them together in a more comprehensive travel insurance plan.
Okay. So this conversation has been extremely helpful to me personally, but I suspect that these kind of discussions on their face may strike some people as sort of too small to bring to their financial advisor or a professional. But especially on the travel side, it seems like we're, looking at a lot of different options, a lot of different details. Do you ever actually talk to clients about like these kind of sort of nitty gritty choices? And if you haven't, would you if someone brought this kind of question to you, or is this a do your own research sort of topic?
I do speak with clients on this, and I'm always happy to. People often do feel these decisions are too small or to ask about, but they really do all add up. And if it affects your wallet, I'd say, or your stress levels, it's worth talking through with a financial planner.
Makes sense. So returning listeners know I like to hand things to my guest before I wrap up the conversation. So Thomas, do you have any final thoughts or things we didn't touch on, either about extended warranties or travel insurance or anything else that's come up today?
I guess I would bring it all down to, my big takeaway being that most extended warranties really aren't worth it, but travel insurance sometimes is. So if you have a good emergency fund, you have strong credit card protections, and you understand what's already covered under, a manufacturer's warranty, you can confidently skip most service plans.
Yeah.
Travel insurance is a little different story. For big trips or international travel, a small premium can provide you with real protection and peace of mind.
Great. Well, thanks so much for sitting down with me today, Thomas. I think this was really helpful for putting all those add-on purchases in context. And I hope our listeners will also feel a little more confident in making those decisions going forward.
Yeah, thanks for having me, Amy.
Something Personal is a production of Palisades Hudson Financial Group, a financial planning and investment firm headquartered in South Florida. Our other offices are in Atlanta, Austin, the Portland, Oregon metropolitan area, and the New York City metro area. Something Personal is hosted by me, Amy Laburda. Our producers are Ali Elkin and Joseph Rangeli. Joseph Rangeli is also our director, editor, and mixer. If you enjoyed this podcast, please take a moment to rate and review us wherever you're listening. It's a simple way to help new listeners find the show, and we really do appreciate it. Thank you.